Government shutdown, once again, front and center. 6 weeks ago, Congress pieced together a temporary funding bill just in time. That measure is due to expire at the end of this week. What will happen now? Before we begin, remember to like this video and subscribe for more economic updates. I am Devlin Steele, Director of Education at Augusta Precious Metals, here with a look at the economic news that's expected to make headlines this week. The biggest story we'll be watching in the coming days is the effort on the part of lawmakers to avert the government shutdown. In focus will be the newly elected House Speaker Mike Johnson's laddered continuing resolution. The plan would provide funding for some government functions through January 19th and other functions through February 2nd, giving Congress time to continue negotiating long-term spending. Unfortunately for Johnson, his plan faces stiff opposition from hardliners on both sides of the aisle. This raises the odds that a shutdown will occur when the current stopgap spending bill expires at midnight Friday. Also this week, the Labor Department will provide us with the latest headline inflation numbers when it reveals the consumer and producer price indexes for October. First up will be CPI on Tuesday. The Cleveland Fed projects the index increase just 0.1 of a point month over month, which would be a significant slowdown from September's 0.4 of a point pace. Its expected annual CPI decelerated last month. Economists are looking for the index to have increased at a rate of 3.3%, down from 3.7% in September. As for core CPI, which excludes food and energy prices, that's believed to have climbed 0.3% last month. Forecasters expect to find that annual core CPI rose 4.2% in October, 0.1 of a point faster than it did in September. The next day, Wednesday, the Labor Department will return with the October Producer Price Index, which examines price pressures at the wholesale level. Year over year, it's expected that PPI increased 1.9% last month, 0.3 of a point slower than September's annual rate. Core PPI is believed to have increased 2.7% year over year, matching September's pace. Also on Wednesday, the Census Bureau will check in with retail sales figures for October, and the numbers are expected to show a sharp decline in spending momentum from September. The consensus forecast says sales declined 0.4% month over month, a sizable reversal from the 0.7% increase posted in September. Excluding automobiles, it's believed sales declined 0.2% last month after climbing 0.6% in September. Finally, we'll get a couple of key updates this week on the health of the housing market. On Thursday, the National Association of Home Builders will reveal its November Housing Market Index. Economists expect the index to come in at 40, the lowest measure since January and equal to where it landed in October. Just 3 months ago, the index was at 56, but has since suffered in the face of surging mortgage rates. Then on Friday, the Census Bureau will reveal the numbers for housing starts in October. Analysts expect to see a seasonally adjusted annual rate of 1.34 million units, which would be about 20,000 fewer starts than September. That's all for now. As we brace for potential government shutdown, we will continue to monitor key economic indicators. Stay tuned for Saturday's recap. This is Devlin Steele for Augusta Precious Metals, signing out.